What's going on, everybody? It's Giovanni from Options Trading Channel. Today, FOMC at 12 o'clock noon our time. I'm not expecting much for the trading action to be great. I'll still be watching the markets, obviously, live. I don't know that Adam's going to be online, maybe. Either way, I'd like to possibly get Tanja's stream, and also Patrick's. I wonder if that's even possible. Let's take a look. Yeah, I'm going to try to stream Tanja's stream here. I wonder. What happens if I do? Can't do that. Oh, there's Adam. What's up, dude?
Oh, nice, man. What are you doing?
Oh, just getting started here, man. I'm live on YouTube, and I'm trying to see if I can possibly get Tanja's stream on as well, just because, just for fun and gigs.
Okay, gotcha.
What are you doing, man?
I was talking with my uncle every morning. He just said no,
Yeah.
What to do. Trying to sign in live. He got pretty far. That was the last thing.
Oh, cool.
Trying to sign in live, and it's like, can't do that.
Yeah.
So anyway, I got it.
There's not much that I can do. I can only really thumbnails thing.
Yeah, what's your game plan? Obviously, no trading this morning, right?
No trading this morning, although I can see the argument for the short.
Yeah. I mean, again, we set up for potential reverse and price delivery. Today's a big day.
Yeah.
To see,
Yeah.
Everyone I think is about ready for the Feds to go ahead and get these rates down. They really hadn't done much. So
we'll see what happens, but boy, look at that, dude. I mean, look at the 15-minute chart, dude. You know how we were doing the 15-minute strategy there for a long time. Yeah. That is it right there. That's perfect. Look at that. It's running down.
My motor's stuck, so I'm out in the fields.
Oh.
I'll look though in a second. I gotta watch away the hell out of here. Oh, why? This thing's stuck again. Oh, ton of elk this morning on the property.
Oh, cool! Get all the poop, elk poop.
That's true. Just watch where I walk. What the hell?
It's good fertilizer.
Now this should not be stuck. That's weird. Okay, well, she's back going again. Huh. Strange. Alrighty. Gotta walk a long way. Well, if you need me to get on your stream to make this a little better, I can do that. But
oh, whatever, dude. No, whatever, man. Whatever works best for you. I mean, I'm all for, because I'm in front of the computer anyways. I'm going to be live streaming, man. Maybe there might be come a time where I'm just recording and then editing out everything and just giving everybody the meat and potatoes, so to speak. But no, I'm just going to live stream, man.
Right on? Okay.
I want to. I mean, eventually I'll figure out how to stream other people as well. Like I think it'd be cool to have Tanja like on the corner just for shits and grins, man. Or Patrick.
Talk about her and what she's up to, and then that would be an opportunity to talk about other people that are selling fake ideas for content.
Yeah, that's one thing I definitely want to do is talk about just the fake gurus, man. All the people that are just in it for the quick buck. Yeah, it's something I definitely want to do.
Oh, well, I just looked at the screen and it looks sideways. I guess what are you talking about? 15 minutes.
Oh well, heck! Now it's back up.
Oh.
But,
yeah, it does.
But do you see the big wake right now in the 15-minute? I mean, imagine watching that live, and it was all the way down there at 4:52, already 50 points ago.
Well, you know what that hit? That hit yesterday's close.
I see it. I sees it.
Yeah. Okay, how are my ETFs? Oh, we're NUGT coming back a little bit. SOXL is up 3%.
Let's talk about it really quick. You have a regular morning. Nothing's really changed right now for you. Is that right?
What do you mean?
You have time to be in front of the computer and watch it.
Yeah.
Okay.
Yeah, okay. I'm not gonna rush out of
Okay.
here.
Let's talk a little bit about the wheel strategy, man. I think now would be perfect time.
Yeah, I mean, out of all the stuff, oh crap! You know what, Cody, bro? This guy's. I gotta call.
Okay.
I gotta get it. So
Good
I'll
deal.
call you back.
No worries. All right. In the meantime, this is what I'm going to do. I'm going to try to find, for your viewing pleasure, what I mean about the people that are just making wild claims. And just so you guys know what I'm talking about. Where is that? Where's that TikTok that I watched yesterday? Oh, sorry, that's really loud. Here we are. Secured puts risk. Cash secured puts risk. Okay. There's a fly here. Shoe fly. Which one's the one that I started with? Dang. All right, I found it. I'll show you guys when Adam gets back online. Pretty interesting. Oh, well, we're waiting patiently, not really doing anything. Again, FOMC today at 12 noon our time, which is 2 o'clock New York time. I'm not expecting the markets to move a whole lot. Because of that, I'm not looking to trade or place to trade. I don't even really see anything really spectacular right now. The only thing that I saw earlier was the 15-minute chart. It was looking good. The main reason, and I don't know how good you can see my screen. So comment in the chat down below how terrible this whole setup is. And I'm going to also try. I wonder if I can zoom in. Yeah. Oh, there's Adam. Yo.
Okay. Sorry.
Are you up for being on camera?
Yeah, I could.
I mean, you don't have to. I'm just.
What's going on?
Oh, just so here, watch. Then I'll invite you over. And so you can see, I found this lady's TikTok. She makes some lavish claims, but I say that, and then she makes TikToks afterwards, making it sound legitimate with the amount of money that she's actually trading with. But I'd like to share this with you. JDB.
I'm looking at my emails.
Give me a second, Adam. Stream. And I wish the software that I'm using dings me whenever you're actually trying to get in, because once I send you the invitation and you accept it, you're like in queue.
Yeah. So the camera clearly affects my mouse.
Really?
Mm-hmm.
That's
They're right next to each other, and yeah.
Oh, you don't have to be on stream then.
I'm already.
Oh, there you are. Add to stream. It does ding me. Interesting.
You just missed it.
Yeah. Let me actually. How's this gonna work?
Your screen's
look
reversed.
reversed.
Yes,
Yes, they're not though.
What do you do? High time frame to the right?
Higher time frame to the right. Yeah.
Interesting. So what do you want me to see?
Let me replace window. Cancel. It's this one. I'm still trying to work my way around this software. Here it is. Let's see if you can hear it. Can you hear it?
I need to,
I guess, turn you up
on
the computer.
Okay, we can show me, I guess.
Oh, yeah.
Yeah, big problems with the mouse. It's gonna drive
Big problem with the mouse.
I can't hear her.
Can't hear? Okay, give me a second.
She's not coming through on the stream.
That's what I'm sharing. That's the screen that I'm sharing.
Just have ChatGPT analyze what sectors am I exposed to with the 5 ETFs I have, and it's clearly tech. And so it tells me to get into a utility and consumer staples, healthcare, and bonds are places I need to be looking.
That's interesting. So this lady.
Yeah, I can't hear.
You can't hear? Okay. Can you at least? Yeah, you can see the screen.
Yeah, I see it. Yeah.
She claims that she pulled in $20,000 last month.
Okay.
And selling options, doing the wheel strategy.
20,000?
20,000. Exactly. So what? And then later she explains this later in other TikToks that she explains how she got that 20,000. And there are some people that have chimed in, commented. They're like, dude, in order that understand what she's doing, know about options and whatnot. and they called her out on it and saying, hey, in order to bring in $20,000 worth of option premium, you must be trading with a lot of money. And then that's whenever like she came out and said, yeah, no, I'm trading with over $300,000. And
yeah, but that's nearly 8% a month.
yeah, exactly.
Yeah.
And so she does show which ones she's actually doing, which
She in stocks or ETFs or what?
Stocks, mainly stocks.
Yeah.
And
so she's using margin.
Possibly, yeah, absolutely. I don't doubt that. And the whole thing that the reason why I want to talk about this is, and this is what I want to do with my live stream, is I want to bring to light like the reality. It is possible to bring in $20,000 a month selling option premium. It comes at a high risk, especially if you don't have the cash, and especially when the markets start to turn against you. And that's really what I just want to bring to the front here and to everybody's attention.
Well, okay, more premium means, and I don't know if that means more risk. What is the risk of a wheel strategy? And risk is defined, I think, by whether you want to own the underlying, right? I mean, that's your exposure. Yeah. And then margin, if people are doing it with margin. I don't think that's the way to go. I think you cash secure all your puts and positions, so there's no margin in play.
Yeah.
And there's really so the risk is if you're expecting to consistently bring in whatever percent in a month, like we talk about 30% a year annualized as a potential gain on your working capital, that you could find yourself in a downturn not able to sell calls against your position. And now you're just holding something. So you got to make sure you want to be in that.
Yeah.
That you're happy being, in that ETF or in your case stock.
You hear that?
So, what is really the risk? It's margin is actually probably your biggest threat. If people are doing this with margin, most times it's 2-to-1 in your exercise, and you own Apple at whatever the hell it's at, 200 or something, and she falls 50%, right? That's double. That's truly a falling to zero in a cash secured. All it's got to do is pull back 100 or 50%, and you're kind of screwed. Now, if you got all your working capital tied up trying to get that kind of money on 300,000, that's your risk if you're using margin.
Absolutely.
Yeah. So it's expectation. I mean, hell, you could sell puts like right at the money and gain the fattest extrinsic you could get, and the percentage would be pretty high, and you could collect that.
Sure.
But your chance of getting exercise is much bigger. Now, I watched a guy doing this on weeklies using margin and was making a pretty good amount on $500,000. He was making half of what she's saying on $500,000.
I see. So
he was actually a little less than 10,000 he collected. But I looked at some stocks and the payout's really sucky.
Most of them are, yeah.
It was like I'm barely gonna make any percentage here, trying to not get too close to Apple at the money price, and I'm getting nothing. A quarter of what I'm collecting.
Yeah.
Right.
Yeah, you can't. And this is, and I get it. We've already talked about him. We've said it's possible. She's not making these claims like she's making $1 million with $50,000. She's not making these wild claims. It's possible to bring in $20,000, The risk, however, is it's pretty risky. Was what I'm trying to say.
Well, again, I don't agree with that. It just depends. If she's using margin, then yeah, she's playing with fire. But if she's okay owning whatever it is at that price, then there's no
She
risk.
has said she's been very adamant about the following, that she's okay with owning it, and that makes sense.
Yeah, you have to be. Never do this in anything you don't want to own. That's like number one.
And I think the one that I have up, my first trade at the end, and then also this is pretty wild to me, which maybe that I'm really biased, but I'm looking at the video that I have up. She started watching videos. No, her first trade was at the end of April. Was using about a little over $10,000 is what she's saying, and then that was in April, and now all of a sudden she's comfortable and selling options with $300,000. It's just interesting. And then also we've been in a bull market.
Well, yeah, you said she's starting in April. Yeah, look at the prices of those Vanguard ETFs that were just across your screen.
Yeah, my long-term holding, Vanguard 309. Jesus.
So one put, $50-something thousand cash secured put.
That's
kind of nuts. So you need to get some fat premium against 50,000. You want to have around 2.5% in 30 days. And so, just go to the option chain and it'll tell you if you can get it. Which, again, you can find it probably, but you're going to be at the money and owning that son of a bitch. So that premium's coming to you no matter what, right? We know this about options. It's guaranteed money with a catch, obviously. And the catch being, you might own it there and then you might draw down. And you might be in drawdown for months and not able to gain any more premium. Finally come out of it, maybe sell calls and then get exercise on the calls. And you're like, hey, cool, I collected this. But then you divide that over the amount of time in which you've had to hold this thing. And all of a sudden you're not making, what I mean? You're not doing that great.
Yeah.
Like I said, it's all, in theory, it's free money.
Yeah.
Because if we don't go into some major recession, 10-year recession or something, right? You can hold. All that premium is guaranteed, remember?
Sure, absolutely.
It don't matter when you get exercised. It's guaranteed money. And then when it comes back up to your break even or whatever your ownership is, bam, it's guaranteed.
Yeah, and it is nice, and this works beautifully with stocks that you want to hold long term. Imagine that you're going to own these stocks or ETFs, and you're going to hold them. You're going to hold them for 20, 30 years, let's just say. And during that time, gosh, imagine just collecting every month just a little bit more over those 20, 30 years. And I might, just to get my point across, 20, 30 years, probably a little too long here. But the point is,
I'm sure I'll make it.
Yeah. And that's truly the reality, though, right? I may be, being a little excessive here, but the reality is you would do beautifully with 20, 30 years worth of premium. You just keep it going. If it goes down against you enough, well, then average down, selling call or selling puts, you get exercise, and it is what it is.
So I have not heard anyone talk about averaging down. That's one thing that I've noticed that's different. Some say the right things about ownership. One guy talked about not in margin, but one other guy was in margin. He was using margin, owning Apple, and that's scary to me. The other thing, so we think of averaging down into one of those. We divide out 3-year lows with highs and look at quadrants of this type of pullback. So we could also look at it at percent pullbacks, 15s, 30s, 50% pullbacks, and we can identify places we're okay adding to our position. But I don't hear anyone talking about that strategy. Everyone's just pretty close to the money, and sometimes they're selling weekly, which I haven't wrapped my head around how that works in exercise. I mean, you're so damn close. You got 5 days you have to deal with. You could get exercise and then be you could be positive intrinsic in no time on the next week just for a day or two. And you're out. I don't know. I don't know how that really what that feels like live. But no one talks about it. I want to find somebody that actually is like, oh, absolutely.
That actually is in it for the long term.
Yeah. And keep in mind, we're only really afraid of that because we're at all-time highs. And I happen to choose ETFs that are very tech and growth. And so I'm actually going to look today at trying to rotate a little bit, not rotate, but add a little exposure to another side.
Yeah.
I don't know if buying a call. Well, I do know that buying a put in a stock that has turned around. Now, again, you're predicting turnarounds. And this is the problem with hedges, but you could theoretically. Okay, so one of the things about the wheel strategy, you say we use $16,000 in ARK Innovations now. We have $16,000 worth of ownership. Okay, that'd be 2 positions roughly. Okay. Well, all of a sudden that 16,000 is not working for you no more. When the calls become worthless in terms of premium against your strike or your position.
Yeah.
Right. So now we're like, well, shit. All I gotta do is hang on, fuck it.
Yeah.
Right. That's what we're talking about. But you're tying capital up. Now, if you owned a put, you're not.
Ooh.
And you freed your capital up again.
Oh, I get what you're saying.
Remember, you're on margin. I'm on margin regardless, but I don't treat it that way.
No.
So if I neutralize the position by owning a put, I have freed up that. There's no more loss. I don't have to keep that amount of money.
Yeah, because if you own the puts, as the stock price goes down, underlying security goes down, your put is making money.
Your put's neutralized.
Well, now we're getting into not necessarily more complicated trading ideas, but at that point, are you looking to go even amounts of puts versus what you own?
Oh, yeah, I mean, you could look at, if you're in 2 or 3 positions, you don't have to do that many puts. Just realize you're using it to free capital up to rotate into something better is what you would do it for. I don't think it's a money-making scheme.
Okay.
But that would be the only way I could come up with that you could be able to free up that cash, that cash secure position, rotate into something else in the meantime. You're probably going to lose on those puts.
Yeah.
Because everything's in hindsight, right? I mean, you're going to be adding puts late.
Yeah.
So intrinsic there is already going to be a negative. And then by the time it's come back around or whatever, when you decide, okay, I don't need puts anymore, my position is doing good, you're going to be in a loss in those puts. Those puts will lose you money, pretty much guaranteed. So you got to weigh that out, right?
Yeah, absolutely. And that is...
But if you use it to free your cash.
I was about to say that. I was like, you use this as a way of not necessarily, you can use it as a way to protect the portfolio, sure, but you're using that to free up your cash.
Yeah, and then the other ways, like I'm trying to do here, and I'm using ChatGPT. It's pretty. I sent ChatGPT the 5 ETFs that I'm in. It knows the strikes, and I said, what sector am I most exposed to? And it said, you're tech and growth heavy. You need consumers and utilities. Great. So I want to find where my portfolio is pretty well balanced in comparison to NASDAQ or the Spider.
Now, when you say balanced, well, actually, right now it's not that big of an issue because you're only in this like one call each, right? Or excuse me, you've sold one put, right?
Right now, yeah.
Gotcha. And so, and of course, like it all depends on the pricing, but when you have a bigger portfolio and you're in your situation, would you look at it as, well, I need to sell the exact same amount of utility, whatever insert utility stock you have here? Would you think about it that way? Like I would sell the exact amount that I'm looking, or would you just say, well, no, I'll just stick with, tech heavy, 80%, 70%, whatever, and then I'll have 30% utilities. Does that?
Well, beta weighting is my portfolio is what I'll be trying to watch for. So
beta weighting. Okay.
Yeah, I want to be bullish to neutral.
Okay, there you go.
So
there you go. That's what I wanted to add.
And so no, I'm not trying to balance to always be delta neutral. Yeah. We've always talked about in just the fantasy world of just constantly being delta neutral but theta rich.
You can't do it.
It's you can't do it. I don't know. Maybe there's somebody out there. I wish they'd hit us up and
I don't
tell
think.
us how to do it.
I mean, just for conversation's sake, I don't think it's possible. The reality is,
Gamma fucks that up for you.
Yeah.
There's probably a moment where you are at one point.
Sure, but
you might just put the trade on, and that you're kind of delta neutral. But as gamma happens, each direction begin.
That's what I was about to say. Is in the moment you might be delta neutral, but as the market moves, shifts, that'll change.
It changes, and then so you just need to be able. You have to adapt to it constantly. I don't even know if that's a strategy, but the idea of just not having a lot of exposure either direction, but you're still collecting your premium. That's what it is. And you're not long anything you're not long ever really, as long as you're covered calls or your puts. You're not in a position where the stock market tanks and bonds go up, that bonds are going to completely balance your portfolio. Yeah. Because if you're doing the same strategy in bonds, well, all you're doing is collecting premium without the risk of exercise. Oh. See what I mean? So you're just padding that premium. It's not balancing the account 100%, right? It's just that some are getting exercise, some are not. So if you really truly want to attack deltas, then you look at actually owning something.
Interesting. What is that called? Yeah. This might be completely off topic, but isn't SPX? You can't own the underlying. It's just
SPX is a true. If you look at the price, is what it is. It's millions, trillions. Yeah. It's just insane. Yeah, SPX is like the true value of everything put together.
Damn, that's interesting.
And so they have options. You play options against it, and owning puts.
Yeah.
Right. Expensive. They're expensive. You'll look at I could totally hedge my whole portfolio and I'll go to zero. It cost me $600 in Spider to have some puts here for the next few months, and that's what I looked, or in the next month, and that's what I looked to collect. More than likely, those puts will lose, and then I collect, and now I'm at zero again. So it's you can't be fully, like I said, you can't fully balance it. But here's the thing we've already talked about is having cash available to add to your position.
Yeah.
An average down, continue selling puts when it's against you. When you're exercised and you're down, selling puts down here. Your price is here, you're selling puts. It hits you and goes down. Right? And now you're selling puts down here. The difference is quite a bit.
Yeah.
Right? You're winged out on either side. And so you might potentially still be able to do a call and a put.
But at the same time. It's
right.
really interesting if your target is 30%, 35%, it's going to be really interesting when the market goes against you, because there is that potential of making quite a bit more than 30%, especially once the market turns back in your favor.
True, depending on what calls and how you covered it,
and how quickly you made it.
But it might get me back to my point of diversifying. It's not necessarily, like we said, just to not ever be down in your account, but some might not exercise.
Mm-hmm.
That's because you're balanced.
Mm-hmm. Yeah.
Right? In all tech and NASDAQ drops sharply, they're all going to drop sharply, which means I'm all going to be exercised. And that means I've got now all of them that I need to manage in terms of adding to my position, which means I need to have a shit ton of cash on the side, right? But what if I'm balanced enough to where NASDAQ takes 1,000-point dip and I've got 8 ETFs on and 2 of them are now having to be, or 3
having to be
worked on
those
8.
Yeah.
You know what I mean? So now my cash is fine on all these others. Now I just have to pay attention to these couple.
Yeah.
That's the
that would be.
So then at that point, you don't have to have that much cash in the sidelines.
Yeah, because you're not having to save all 8 or your entire portfolio.
Exactly. So that's a way around that. And that's why you would diversify. Try to be balanced in this sense. So like I need to look at either the sectors or even some stocks that are in the consumer staple utility range of things, XLU, which XLU premiums are terrible.
They are everywhere.
Oh man, they're terrible.
I wonder how hedge funds, because you know that hedge funds do this in high volume, and they're trading. $1 million is nothing to any hedge fund. So like, where are they going for that type of volume? What are they trading? I'm curious to know that.
Well, my spread's not terrible, but I mean, the premium is nothing. So basically, let's say an XLU on the put side, I can own at $82. That's $8,200 that I'm going to cash secure.
Okay.
I'm going to get 42 cents. 42 cents for it. For that 82, I need about $1.80 to hit my 30%.
Yeah. Okay.
And it's 42. So I'm looking at quarter of what I need for me to be in a 30%. I'm using $8,000.
Yeah.
Right?
Yeah.
So that means I can't use it anywhere else. I'm not going to sign up for what would this be? 5% or 6% annualized return on XLU? No.
That's the other thing that, man, you're, again, 30% of your money sounds, I got to say it this way, for mature people, 30%, it's such an incredible investment. Talk to, somebody that isn't as mature. It's like, man, 30%, and I only have $2,000 to invest, $5,000. Like I'm never going to get anywhere.
Well, where I'm at, Central New Mexico, and we've talked about this, but I'll do it since we're on stream. Just go out and purchase some storage units or a duplex or RV park potentially, especially building one. They're expensive to build with power and septic, and look at what you're going to invest and look at the returns, and 30% a year is insane. We're talking about cap rate is what we're talking about. So cap rate on a lot of this stuff is like 8% is good. Yeah. Meaning if I spend $1 million on this property and it's got an 8% cap rate, not only do I got to keep it running to sustain, everything's got to keep working that way. What does that take you? 13 years or something?
13 years to get your money back?
Yeah, and of course nothing works with the camera on.
Why is that? Why is all of a sudden the camera the issue?
Yeah, it's like 12 and a half, right? 12 and a half years or something. So think about that. And if you can maintain 30% on that $1,000,
it takes 3 years. Yeah, drastic change.
The difference is we've talked about. That person is putting $1 million to work.
Yeah, and you probably have $2 million.
Well, no. What you've done is you've probably only had $250,000 you gave to the bank, and you carry the note on the other $750,000, right? You pay interest and all that. It takes 13 years to get out of it, but you've got $1 million working. Where if you have $1 million, are you seriously going to have $1 million tied up? No, you're not. You probably have 800 to 700.
Now you're talking about margin when you come full circle.
Well, not margin. No, needing cash on the side, right? You're going to need cash, so you can't use all of it. I don't think.
No, you should never use all of it.
But maybe these people that you're researching are. And they're doing fine.
God, and always.
And they're not going to try to average down. They don't care. So you just put everything that you can. Like, let's imagine you just said, "Fuck the game of averaging down," meaning I'm not going to invest anymore. Simplifies things.
Yeah.
So then you just say, all right, well, I've got $30,000. I don't mind owning $30,000 worth of whatever, and you use every bit of it. Okay. Fuck it.
I don't. Okay. Yes, that is. You can do that.
And then you get exercise. It falls even harder. Then you're just waiting.
I see what you're saying. You're saying, okay, I'm going to put all of my money to work from the get-go, selling puts, and just keep selling it week after week, month after month, until I get exercise. So you've collected all of this premium for however long it was, and who cares? Like I now own the stock now. Here's clearly the problem that I see, that you and I we know this. You can't play the game any longer. You can sell calls, and if the market still continues to go against you, goes down, that premium is going to shrink time after time, whatever it is, week after week, month after month. And as long as you're okay with just collecting peanuts until the market comes back out, sure, I get where you're going with that. However, to play this game, continue to play this game, and continue to collect fatter premiums, you need money on the side.
So what's the trade-off?
The trade-off.
No, think about the two trade-offs. So one, you're trying to guarantee the monthly, but you're not using all of it. So in terms of dollar amount, it's less,
Sure.
right? Okay. The other way, you're actually putting it all to work. And so the premiums are big from the get-go.
Mm-hmm. Yeah.
Right? Which is more than what you're collecting the other way, because the other way you've got half of it still available
Sure.
or whatever. And what does that really mean at the end of the day? End of the year, 2 years, and you get what I'm getting at, and you can't answer the question.
You don't really know because, well, again, it goes back to what's your intention with the strategy? What are you aiming for? And it's going to be a different answer. Everybody's a different answer. Maybe it's a personality thing. Protecting myself and my investment. Of okay, I'm going to own this for long term, and let's just I don't care about premium so much. I want to own the stock long term. And well, that right there simplifies things to me. If you're going to own the stock long term,
okay, use some simple math. We'll guess at this. Let's say you have to leave about 50% cash. You're doing it all in just one ETF. Fuck it, right? Let's say it's ARK Innovations. So you put it all to work. You're gaining double the premium that you would have the other way. Okay, because you don't care about assignment. You're close. You're gaining double premium versus using half of it, getting half the premium, and then trying to add to it later, not knowing if you're even going to get a chance to do that. Here you are just selling minimum amount as it just moves kind of up like this, and you're just kind of chasing each month and month, and you're only using half, meaning that weighs up to being half the time not collecting anything. When you start out full board, get exercise, and it goes deep against you. Now you're not collecting anything. You could spend 6 months out of the year in that type of scenario, and it would be the same money at the end. I
get what you're saying.
Yeah. So there's a big difference, and I don't know which one really. I mean, I can tell you if we start in April, I can tell you which one would be a better way to go.
Yeah.
Right?
Yeah.
Like, that's easy. It's like, oh, if we started in April, really close puts and use every capital you got, and you're fine. When you're dealing with all-time highs, you probably have to take a different approach to it. You want to see
a pullback, and then that's whenever you start it.
And then you want to be in on that, yeah. And so that's another reason. Like, I'm watching percent change on some of these ETFs that I could use.
Not only for, well, there's several reasons for that. Not only will you'll get a better price during pullbacks, but volatility creates
a lot of things in your favor.
Creates better premiums.
Yeah, everything is in your favor. So, I don't know. We need people that do this to say, hey, no, fuck that. Use margin, go close on puts, go weekly, and collect a monster amount of premium, and you'll be fine. Don't worry about it, blah, blah, blah. I think it all has to do with what you've chosen to play with.
Let me see.
I need a water up there. Well, we'll keep searching. People with wheel strat. I need to keep doing that one too. What sector? So utilities, XLU, consumers, XLP. come on.
What? Oh, your mouse.
And keyboard are affected. You know, the little thing. Not putting new batteries in the keyboard yesterday.
That's so weird.
Okay, XLP, consumer staples, analyze. Ugh.
No.
Shit. Well, if that's the case, you know, I don't know. Yeah, that's nothing.
Oh, no, that's not what I was trying to do.
Implied volatility is really low.
I wanted to check out the options in Roblox. I've never seen them.
What is that ticker?
RBLX. Oh, I thought they were going to be a lot worse. Earnings is tomorrow. No wonder. They're not as bad as I thought they were going to be.
It's $122. So yeah, premium's really fat. You said
Tomorrow's earnings. So
oh shit, yeah. So their implied volatility is 69%.
So that's the stock that my son has owned since $33 a share.
Well, so you want 30%, dude. You could put your ownership down at like 102.
Yeah. What you would do 30 days out?
That's where I have it now. I mean, let's look at weekly. And I'm assuming probably
next week, not.
So, I mean, you could be on a weekly, you could get the same percent at like 106. Remember, you're doing it weekly.
Yeah, that's crazy, huh?
You okay owning it at 106? You put up $10,600 to do that.
That's wild. Don't have 10,000. Let me tell you.
Oh my god, you motherfucker. Okay, so you're gonna get, let's say 206 divided by 106 basically. And my calculator, none of it works, so I can't fuck.
Why? Is it really the camera?
Well, I can sit there and type and it doesn't read it, and the mouse goes.
That's wild.
It can't keep up with the fucking sharing with the camera. Yeah, there's something going on with that. I don't know what the fuck. Yeah, I can't do anything. But you're talking about per week. Let's try this again. 2. Not working. Oh man, those are the things that make me homicidal.
Wait, you know what? Let me try something. That's not gonna help you, but I wonder if I can.
Well, anyway, I mean, hell, you could do the math, but then look at that, you know, on a weekly, what that equals. Why don't you do it real quick?
Give me a second. Can you?
Let's pull the calculator up. I'll tell you the numbers. Ready?
Okay, go ahead.
Let's do it on my 2.12.
2.12
divided by 106.
By 106
times 52.
1.04. So what is that?
Yeah, that's 100%. It's 104%.
I get it. You're doubling your money in a year.
Yeah, if you could sustain it somehow.
Incredible. Just because I'm noticing it, market is sideways. The 50 chart, it is.
Of course.
Look at all those wicks, top, bottom. You can see it on the 1 minute, or excuse me, 1 hour, 4 hour. Let's see how terrible the 1 minute is.
Take a combine when you get up to about 515 or so.
Oh, sell, yeah, just ping pong. Sure.
Just follow the ping ponging until noon. That'll be the time that takes off for some reason.
The one time that you get in. Do you have access on your side to just control anything on the stream? I'm curious, like at the bottom of the screen.
No, I can chat with you.
Dang.
No.
Crazy.
There's a plus sign. I don't know what that means. Screen share, more cameras, presentation, local video. Might be able to, I guess, load stuff there. Maybe.
Huh.
Well, yeah, Roblox. I mean, be honest with you, if you don't care about owning it, before earnings is a great time to be. You'll be searching for that premium, be watching earnings, and you could probably do a scanner.
For earnings, for high volatility, for
and sell and do the weeklies ahead of leading into it.
Yep.
Right. Again, I just don't know if I want to own $10,000 worth of Roblox right there. But it is intriguing to think you could do that 100%. Margin will only require half of that.
Margin will require just half of that. Yeah. It sounds cool, right? Until it's not.
Right. Yeah. I mean, imagine just rotating to high implied volatility by the week and putting a lot into one.
I don't.
And then when you get stuck, you get stuck.
That's my issue. You get stuck, you're done. You're absolutely done. And you're stuck with just getting what you absolutely can on that one position.
How do you know anything about the scanner? I don't use it.
No, I used to. You can filter. You can add a lot of inputs, a lot of filters, and then but you got to fine tune it, which I forgot how to do.
Hold on one second. So many people are starting to walk up and down Airport Road, man.
Really, they're pretty far from the property, man. Your dogs are.
Oh yeah, any movement, man. They sense that shit.
Not our new puppy, man. She's 6 months old now. I took her out. I don't know. It was either yesterday or the day before, early in the morning. There was an elk, not even 10 yards away from her. She didn't even notice that.
Really?
It's hilarious.
That's cool. Ooh, STP. Pro shares, ultra short, utility. No, that's not good. Yeah, I mean, I don't know how to use a scanner. So there's got to be a way. It'll just give you the high implied volatility. Yep. And yeah, I don't know. It's probably real easy. But anyway. All right, man.
Done?
Yeah, I guess I'm out. Outies. I got nothing. I'm not gonna obviously.
Yeah,
trade.
I'm not trading either. I'm not doing anything other than just watching, and heck, I'll watch through 9 o'clock, but that's it.
All right, man.
You can go to the job site.
Well, we'll holler at you later.
All right, take care, man. See you later.
Later. Bye.
Really nothing going on. Nothing going on, so I think I'm going to take off as well. I've been watching Tanja as well and Patrick, and they're not really doing much. We're just jawboning at this point. FOMC is the important piece today. Again, 12 o'clock our time, my time, 2 o'clock New York time. It's all going down. See you guys here on the very next live stream. I'm trying to live stream every day. But I appreciate it, guys, for anybody that's tuned in. It's been fun chatting with Adam about the wheel strategy. I love talking about just strategy in general. And it's doable, but to do it safely, in my opinion, you need cash on the side ready to jump in with more to quote unquote average down and still be able to play the wheel strategy, rotate in and out. But alrighty, guys, see you guys here on the very next live stream, which will be tomorrow. See you guys later.